In this video, I'm going to be going over a weekly outlook of EURUSD for the coming week and then go over a case study from an excellent trade that played out perfectly last week. So let's get straight into the weekly outlook. For the purpose of this weekly outlook, I'll start from the daily time frame because we do not need to go onto the weekly time frame. As you can see, we don't really need it. So we need some more information, so let's go to here. We'll start off by drawing our breaks of structure that we've had and that we drew in the last and previous weekly outlook. So we can clearly see that price is going to the downside, and we finished last week very strongly with bearish impulsive candles. Now if I drop to the 4-hour time frame, it gives us a little bit more information. So we had this gap that we opened up with last week. It got partially filled and then price rolled over. Now I feel as if this gap didn't get filled completely because of the bearish fundamental sentiment in the market, and EURUSD just couldn't find enough buyers to go fill this gap and then roll over, and instead just rolled over, partially filling this gap. So what am I going to be looking at coming into this week? Well, I'm looking for supply zones, because after an impulsive move, price should retrace, tap into a supply zone and then continue to the downside as long as the fundamental sentiment is still bearish, which unfortunately it is going into this week. At this point here, I'm looking at clear supply zones. Around here, there's not really a clear supply zone. Over here, I can see one very clearly, and I'm going to mark that one out here. So that's something I'll be looking for. Price can come into this area, give us a reaction and then pull to the downside. And it's fair to say that there will be some sort of supply zones within this area as well. So if we drop down to the 1 hour time frame and have a look, now quite clearly we can see price was moving very choppily and not so impulsively until this point here, and we get an absolute massive impulsive bearish sell-off. That to me is a very clear order block. So generally I'll mark out the green candle, but because we're in quite a small range, as in these candles are moving sideways, we can mark out these candles, include these candles as well. So we have something here that I believe price can, trickle back up to and then react from. So far we have a good response from the market, where price has been moving slowly and steadily and looking like it's going to give us a nice corrective pullback into this area and then hopefully an impulse back to the downside. Above this area, we still have all of this. We have, a supply zone here. We have a small one over here. But these two, I'll only be looking at if this supply zone doesn't work out. And then we have a clear supply zone right at the top over here. So if I can simplify this one down or refine this one down, we can see we have this one here. So these are the two supply zones I'll be looking at. I won't be looking for buys, and the main reason is because of the absolute sentiment for this market at the moment is to the downside. I don't want to be trading against the trend, especially when the trend is being influenced by significant fundamental sentiment. So if I just mark out what I'm looking for nice and clearly for you guys, so I'm looking for something along the lines of this to the downside and this over here. So these are the two things I'll be looking for at the start of the week. Now I would drop down to the lower time frames, like the 15-minute and the 30-minute, which is what I do when I come to the charts every morning for the London session. But unfortunately, price hasn't printed enough information for me to give you a good weekly outlook using the lower time frames. So we're going to have to stick to the 1 hour, 4 hour and daily time frames. That's it for the weekly outlook. Now let's move on to our case study of a trade that I took last week on EURUSD. This trade was taken on Tuesday, the 1st of March. So when I came to the charts on the 1 hour time frame, the first thing I went and did was I marked out the 1 hour supply zone, which was above where price was. And price at this time, we can see, was moving towards this supply zone, which to me was a good sign. If I drop down to the 15-minute time frame, what I can see is we've actually had an entry draw print during the Asian session. So if I just mark out this price action, you'll be able to see it very clearly. This is what we've had. There's our entry draw. And so I knew that price should come in and around this area. I'm going to drop down to the 5-minute time frame and then let's see what price does. So price comes into this area, and now what I'm looking for is a reaction. By reaction, what I mean is I'm looking for my entry drill to tell me to short this pair. And as we can see, we start to get the high, a higher low, a higher high, and we break structure over here. So this is a good sign for me, and that is letting me know that we have a potential short opportunity come about. So what am I looking at? I'm looking at this supply area here, or this order block over here. I want price to come into this order block and then give me an entry or trigger me into my position, and then I'll look for shorts targeting with my first target at the Asia range low. So I have something like this up. As you can see, because of the situation with Russia and Ukraine, you know, stops are a bit bigger, so I'll put it to about 9.5. I think added like 0.4 for spread, and price came back, triggers me in, goes into the 50% of the GAN box of the order block, and my target was around here. So I was looking for about 3.5 at this trade, and because my risk reward was quite small, I was also looking for a runner to run to New York or London session low. It depended on how price was moving and reacting. Now as we can see, price messed around at this point, and then we start to get a very nice impulsive move to the downside. At this point, I'm just waiting for Asian low to be taken and then seeing what price does. Oh wait, let me put that back to Asian low. There we go. And you can see that my take profit was tapped very nicely. Now at this point, we can see here that price starts to give us rejection candles or exhaustion candles. And what I did was I took off around 80% of my position at this point here. My stops were at break even, and I was looking at these two areas. Now the reason why I didn't take 100% of my trade off at this point was because of the bearish sentiment in the market. As traders, we look to take advantage of fundamental events like this and fundamental outlooks like this so that we can profit more from our trades. And and the way to do that is to leave runners to run, or leave your whole position to run, depending on your risk. At this point, like I said, I closed 80%, left 20% to run, and as we can see, the bearish impulsive move continued. It took out New York low, and then it took out London low as well, which you will see come through here. So this was a very nice trade. Overall, if you held it to London, obviously that's quite risky, but you would have got yourself a nice 1 to 6. But like I said, I closed 80% at 3.5, and then I left the rest to run to this point here, 6.36. So that's it for the case study of EURUSD during last week. I hope you've enjoyed this video. Make sure to subscribe, give this video a like, add me on Instagram, and if you would like to learn the way I trade, click on this playlist and have a look through these videos. Thank you for watching, and I'll see you in the next one.